All right, so today we're diving into some fascinating source material you provided.
Yeah.
All about gold investing. Specifically, some excerpts from a Korean language video.
Right.
And I think our mission here is, a lot of people are interested in gold right now.
Yeah.
We want to kind of distill what are the key arguments, the key insights that this video is presenting about gold as an investment, especially in the current economic climate.
I think that's a good goal.
Without getting too bogged down in the, all the technical jargon.
Oh, right. Cut to the chase.
Yeah.
So this video jumps right into it.
Okay.
Starts by acknowledging this, pretty significant gold price surge we've seen, especially since 2022. And of course, they bring up economic uncertainty. The Russia-Ukraine war is front and center as a driving force.
Yeah, but it feels like there's always some kind of global crisis happening.
Right.
Why is this particular one making people turn to gold?
Well, the video argues it's about more than just the war itself. It's about the global response, the sanctions against Russia, and specifically the use of the SWIFT system as a weapon.
So it's like everyone suddenly realized, wait a minute, our assets could be vulnerable too.
Right.
If we're on the wrong side of some, political decision.
Exactly. And they really emphasize this idea that it's led to a shift away from the U.S. dollar as the primary reserve asset.
Oh, yeah.
Central banks have been diversifying, and gold is a big winner in that.
I see.
They talk about record-breaking gold accumulation by central banks really since 2010, and even more so since 2022.
Okay, so we've got this, the fear factor driving some of this interest in gold. But gold has always been seen as, kind of a safe haven asset, a store of value.
Right.
What else is the video saying that makes gold stand out now in particular?
Well, it goes back to the core of what makes gold valuable.
Okay.
They highlight its long history. It's been a form of currency for over 5,000 years.
Right.
It's finite, and this is a point they really stress. Physical gold is untraceable.
Okay.
You can't freeze it. You can't confiscate it like you can with, say, digital assets.
But haven't we seen attempts to control gold?
Yeah.
Like, what about those bans on Russian gold from the London and New York markets?
They actually use that as an example of how ineffective those attempts are.
Interesting.
They say once gold is melted down, you can't tell where it came from. They give the example of India.
Yeah, right.
India was buying Russian gold and just reselling it on the international market. So they're making the point that it's really difficult to truly control the flow of physical gold.
So it's like this ultimate fallback.
Yeah.
It's outside the control of any single entity. Okay. But how does gold actually perform compared to, say, stocks?
Right.
Is it a good investment in that sense?
It's funny you ask that because they address this common misconception that gold and stocks move inversely, and they kind of push back on that. They say, while there are exceptions, gold and stocks generally move independently of each other, and they actually present some data.
Just to back that up.
Wouldn't you say that the recent stock market volatility kind of suggests at least some correlation? I mean, we've seen both stocks and gold dip in response to certain events.
Right. I mean, short term, there can be reactions to specific events for sure. But what's fascinating is that they introduce this concept of historical cycles.
Okay.
So they're looking at this over longer time frames. They're saying there are periods where gold outperforms stocks and vice versa.
Like a financial seesaw.
Exactly. And there's actually a chart that they describe in the video showing these cycles going back over the past century.
Wow.
And according to their analysis of this pattern, we might be in a gold cycle that actually started around 2019 and could potentially go on until, 2029 or 2030.
So we're at the beginning of a potentially long period of strength for gold.
Yeah, that's what they're suggesting.
But what is actually driving these cycles?
That's the key question, right?
Yeah, and they point to real interest rates as the most crucial factor.
Okay, so for our listeners who might not be familiar, can you break down the difference between real interest rates and those nominal rates that we usually hear about?
Absolutely.
Yeah.
So most people think about nominal rates. That's what your bank advertises, right?
Right.
Yeah. But real interest rates, that's the nominal rate minus inflation.
So even if the advertised rate looks good, if inflation's high,
exactly,
your real return could actually be negative.
Yeah, and that's where the video makes a really compelling point.
Okay.
They argue that when real interest rates turn negative, holding cash or bonds becomes unattractive because inflation is eating away at your value.
Right.
So that's when gold, even though it doesn't offer interest, starts to look really good.
It's like that old saying,
yeah,
a bird in the hand is worth two in the bush.
Yeah.
But in this case, the bush is on fire because of inflation.
Haha. I like that.
Right.
They actually point to several years where this played out, 1934, 1970, 2002, even 2019. Okay. Each time negative real rates coincided with a big upward movement in the price of gold.
So negative real rates could be a signal for a potential gold bull market.
Absolutely.
Is that what they're saying caused this gold supercycle that they keep mentioning?
Yes. Okay. They argue that we entered this supercycle around 2019.
Okay.
And negative real interest rates are a key factor, but not the only one. Oh, they also mention declining gold production.
Right.
But before we get into that, maybe we should clarify.
Yeah.
What exactly is a supercycle?
It sounds kind of like a regular cycle, but like on steroids.
That's a good way to put it.
Yeah.
It's not just about the length, though. They do say supercycles typically last 9 to 13 years.
Okay.
But what really distinguishes it is the magnitude of the price increase.
I see.
It's a sustained, powerful upward trend driven by these fundamental changes in the market.
Right.
With those negative real interest rates we were talking about. So not just like a little bump in prices, but a potentially massive shift.
Exactly.
Okay.
And here's where it gets really interesting.
All right.
They claim that these supercycles have a tendency to accelerate as they progress.
Wow.
So the price increases get bigger and faster over time.
So if they're right, we might just be at the very beginning of a truly remarkable bull market for gold.
Potentially.
Okay, so to recap what we've learned so far, we've got geopolitical uncertainty, the shift away from the dollar, the inherent qualities of gold that make it so attractive, and then this whole idea of a potential super cycle driven by these negative real rates. It's a lot to take in.
It is.
But it does paint a pretty compelling picture.
Absolutely.
But we can't forget about this key fact about gold.
Right.
It's finite.
Exactly.
You can't just create more of it out of thin air.
Nope.
So I'm curious, what does the video say about that?
Okay.
How much gold is even left?
That's where it gets really interesting.
They actually claim that based on current production rates, global gold reserves could be depleted within the next 20 years.
Whoa. That's a lot sooner than I would have imagined.
Yeah, it's a striking claim.
It is.
And they use it to really emphasize just how scarce gold truly is.
Right, because even though gold is recyclable,
the
overall supply is still limited.
That's right.
But what about synthetic gold?
Ah, good point.
You know, I've heard some talk about creating gold in labs.
Yeah.
Wouldn't that completely change the supply equation?
So the source material does address that.
Okay.
And they say, look, it is theoretically possible to create synthetic gold. Okay. But current methods are just astronomically expensive.
Really?
So mining and recycling are far more economical options for now.
So synthetic gold isn't a threat to gold scarcity yet.
Right.
But if it ever did become viable, wouldn't that suggest that gold prices are already insanely high for it to even be worth trying to create it synthetically?
That's a great point, and it's one they make in the video. They suggest that if synthetic gold becomes a reality, it would likely mean that the price of gold has already reached extraordinary levels.
Interesting. Okay, so we've got this kind of perfect storm brewing for gold, it sounds like.
Yeah.
But the big question is, what does all this mean for actual gold prices?
Yeah.
Is there any way to actually predict what's going to happen?
Well, this is where the video gets really intriguing.
Okay.
They introduce something they call the gold price equation.
Hold on. An equation.
Yeah.
Like a mathematical formula to figure out what gold will be worth.
That's exactly what they claim.
Okay.
It sounds wild, right?
Yeah.
But they say this formula is based on 5,000 years of historical data.
Wow.
And it's all tied to the amount of currency in circulation.
Okay, I'm listening.
Yeah.
How did that work?
Well, essentially, they argue that throughout history, periods of excessive money printing have always led to what they call revaluation events. So the price of gold adjusts upwards to reflect the increased amount of paper currency in circulation.
So more money in circulation means each unit of currency is worth less.
Right.
And gold, being this finite, tangible asset, goes up in value.
Exactly, like a natural rebalancing act.
But what kind of historical examples do they give for this?
They mention the gold revaluation in the U.S. under President Roosevelt in 1934.
Okay.
And then the Nixon shock in the 1970s.
Right.
Both periods where we saw significant changes to monetary policy that led to large jumps in the price of gold.
Okay, and what's the takeaway from this equation?
All right, so here's the kicker.
Okay.
Based on this gold price equation, they're projecting a gold price of $23,000 per ounce by 2025.
$23,000?
Yeah.
That's over 8 times the current price.
It is.
Are you serious?
That's what the video claims.
Wow.
And they attribute it to the current rate of money printing and this historical pattern they've identified.
Okay, so even if that exact number doesn't pan out,
yeah,
it definitely makes you think.
Right.
If gold is tied to the amount of currency in circulation and governments just keep printing money.
It raises some serious questions about the long-term stability of fiat currencies.
Right.
And I think that's really what's driving this bullishness on gold that we see in the video.
Okay, but before we go any further, we have to address the kind of elephant in the room, or rather the digital elephant. Bitcoin.
Of course.
Everyone's calling it digital gold these days.
Right.
So how does this video compare the two?
Well, that's a great transition because they do get into that. Right. And they actually say that Bitcoin is not a true substitute for gold.
Interesting.
So let's dive into that comparison and see what insights they have to offer.
Yeah, let's do that.
Welcome back.
All right, so we left off on this big question, gold versus Bitcoin.
Right.
And this video, it's interesting, they call Bitcoin digital gold, but then they go on to say it's not really a true substitute.
Right. They acknowledge the similarities.
Okay.
You know, both have limited supply, both are decentralized in their own ways, but they argue that Bitcoin's transparency, which is usually seen as a good thing, becomes a weakness compared to gold.
It's kind of a paradox, right?
Yeah.
Transparency is good for trust,
right,
but bad if you need to, say, avoid sanctions.
That's exactly the point they make.
Interesting.
They bring up the Russia-Ukraine conflict again.
Okay.
And they say because all Bitcoin transactions are on a public ledger, they can be tracked.
Right.
So if your assets are in Bitcoin,
they
could potentially be frozen, just like traditional bank accounts.
Whereas gold is like this anonymous offline network.
Yeah.
No records, no way to really trace where it came from or where it's going. And that makes it much harder to control, especially for governments.
Precisely.
Yeah.
And the video really emphasizes that, this idea of gold's superiority as a geopolitical tool, especially in a world with, you know, increasing sanctions and financial surveillance.
Right. It's almost like gold is the ultimate off-the-grid asset.
Yeah.
No matter what happens in the world.
Right.
You can trust in its value and its ability to move freely. But that brings us back to something we talked about earlier.
Okay.
Remember, the video mentioned central banks buying up gold, diversifying away from the dollar. So if gold's price keeps going up, what does that say about the dollar itself?
That's a crucial question, and I think the video hints at a bigger picture here.
Okay.
You know, if gold is a barometer of monetary health, its current trajectory suggests that confidence in fiat currencies,
like the dollar.
Like the dollar, exactly.
Yeah.
Might be waning.
Especially with all the uncertainty in the world.
Right.
You know, geopolitical risks, economic instability.
Yeah, people are looking for something solid to hold on to, something that's not subject to the whims of, you know, governments or central banks.
Right, and gold just fits that bill perfectly. You know, it's tangible, it's finite, and it has this incredible history of surviving empires and financial crises.
Right, the ultimate survivor in the world of finance.
Yeah.
It's been around for thousands of years, while countless other forms of money have come and gone.
It really speaks to this deep-seated human trust in gold that transcends borders, ideologies.
Yeah.
Okay, so we've talked about the big picture, geopolitical shifts, declining trust in the dollar, the rise of gold. But what does this actually mean for individual investors?
Right.
Should everyone be rushing out to buy gold bars right now?
That's the million-dollar question.
Yeah.
Or perhaps the $23,000 question.
Oh, right.
Remember that projection?
I don't think I'll ever forget that number.
It's pretty striking.
But even if gold doesn't hit those astronomical levels, it sounds like it can still be a valuable part of a diversified portfolio.
I think so.
It's not just about potential profits.
Right.
It's about preserving wealth. protecting yourself from the inherent risks of a fiat currency system.
Absolutely.
It's like that insurance policy analogy.
Yeah, you hope you never have to use it.
Right.
But it's there for you if things get really bad.
And with inflation, still a concern.
Yeah.
Geopolitical risks rising. The future of the dollar uncertain. Having some gold in your portfolio could provide a sense of stability.
I think so.
And security.
Yeah, it's a way to diversify your risk, hedge against the unknown.
Exactly. It's like having a financial anchor in a stormy sea.
I like that.
Something solid to hold on to.
Yeah.
When the waves of uncertainty start to crest.
A good analogy.
But of course, every investment comes with risks.
Of course.
You know, it's important for people to do their research.
Absolutely.
Understand their risk tolerance. Talk to a financial advisor.
Right.
Before making any big decisions.
For sure.
But while we're on that topic,
okay,
you know, considering gold's place in a portfolio,
yeah,
it's also worth thinking about this bigger question. What does the future of money even look like?
Wow, that is the big question.
Right.
Are we headed towards a world of digital currencies, a return to gold, some kind of hybrid system?
Yeah.
It's hard to say for sure.
It is.
But the trends we're seeing, they definitely suggest we're in a period of transition.
For sure.
The dominance of the U.S. dollar is being challenged. Central banks are diversifying. Digital currencies are gaining traction. The whole financial landscape is in flux.
Yeah, it's exciting.
It is.
For those who embrace change, but maybe a bit unsettling.
Right.
For those who prefer, you know, stability and predictability.
That's true.
But no matter what happens, it's important to stay informed, be adaptable, and never stop learning.
Absolutely. And that's what this show is all about.
Right.
You know, helping you make sense of this complex world of finance and investment.
And speaking of complex, this video really made a compelling case for gold.
It did.
You know, it wasn't just about, like, market predictions or technical analysis. It went deeper.
Yeah.
Exploring gold's history, its inherent qualities, and why it's always been seen as a hedge against uncertainty.
It was a deep dive into the very essence of gold.
It was.
And it leaves us with a final thought to ponder. What if gold's rising price isn't just a reflection of current events, but a sign of something much bigger?
Ooh. A sign of a shift in the global financial order.
Possibly.
A move away from centralized control and towards a more decentralized multipolar system where gold regains its historical prominence.
It's a fascinating possibility.
It is.
One that raises these profound questions about the future of wealth, power, and the very nature of money itself.
Wow.
Questions we'll continue to explore in future episodes, right?
Absolutely. That's what we do here.
Right.
But for now, we hope this deep dive has given you a new perspective on gold and its potential role in your financial journey.
You know, knowledge is power.
It is.
And in this complex world,
yeah,
the ability to make informed decisions is more valuable than ever.
Couldn't agree more. All right, stay curious.
Keep exploring.
And we'll see you on the next deep dive. Wow, we've really gone deep, haven't we?
Yeah, it's been a journey.
Exploring all these facets of gold.
Mm-hmm. From geopolitical risks to the gold price equation. It really makes you think.
It does. You know, that source material, it got me thinking, too.
Yeah.
It wasn't just about, you know, number crunching and charts.
Yeah.
It was about understanding, like, the historical significance of gold.
Mm-hmm.
The qualities that make it unique.
It's true.
And this whole idea of, like, a safe haven asset, it really came through.
They made a good case.
Yeah, I'm starting to see gold in a whole new light.
Oh, yeah.
Yeah, it's not just some shiny metal anymore. It's like this tangible link to history.
I like that.
A symbol of resilience, a hedge against all the craziness in the world.
It's true. Gold has this incredible ability to kind of transcend time.
It does. It's like holding a piece of financial history in your hand.
That's a good way to put it. It speaks to that deep-seated human need for stability, for something that holds its value.
Yeah, that primal trust in gold, it's fascinating.
Yeah, it really is.
But we can't get carried away, right?
Right.
I mean, gold is still a market, and markets can be unpredictable.
Absolutely. There are a lot of factors at play, and no investment is without risk.
Exactly. The video made some compelling arguments for gold, but it all comes back to, you know, the value of the dollar, right?
That's a key factor. The price of gold is always going to be influenced by the perceived stability of fiat currencies.
So, like, If the dollar were to suddenly become strong again, if global confidence just, magically returned.
Right, anything is possible.
Wouldn't that mean gold could go down?
It's possible. Short term, we could definitely see fluctuations. But the source material did highlight some longer-term trends that could continue to support gold's upward trajectory.
Right, like those dwindling reserves.
Exactly. The rising cost of production and this whole idea of central banks continuing to diversify their holdings.
Ooh, and what about that wild card? Synthetic gold.
Yes.
If that ever became a reality, it would kind of imply that natural gold is already super valuable, right?
That's a great point. If it becomes economically viable to create gold in a lab, it would suggest that the price of natural gold is already at a level where that makes sense.
Exactly. It's mind-boggling to think about.
It is.
And then there was that gold price equation. Still can't get over that. $23,000 an ounce by 2025.
It's a bold prediction for sure. Whether it comes true or not, it's hard to say.
It is. But I think, regardless of those specific numbers, all the arguments we've discussed suggest that gold could have a really important role in portfolio.
I agree. It goes beyond just potential profit. It's about preserving wealth, hedging against all those uncertainties we've been talking about.
Inflation, geopolitical risks, the unknown.
Exactly. It's like having a financial life raft.
A life raft?
Yeah, something to keep you afloat when the seas get rough.
I like that. A financial life raft in a stormy sea.
Exactly. And I think what makes this source material so valuable is that it brought us back to the fundamentals. It wasn't just about speculation or quick profits. It was about understanding gold's historical role, its inherent value.
It really puts things in perspective. Gold isn't just an investment, it's a reflection of our relationship with money itself.
That's a great way to put it. And it leaves us with so much to think about.
It does.
What if this isn't just a temporary surge in gold's popularity? What if it's the start of something much bigger?
A fundamental shift in the way we think about money and value.
Exactly. A move away from centralized systems, a return to something tangible and enduring.
It's a fascinating possibility, and one we'll continue to explore.
Absolutely. On future deep dives, we'll keep digging into these big questions, exploring the evolving landscape of finance and investment.
And in the meantime, we hope this deep dive has given you a lot to ponder.
We encourage you to keep learning, keep asking questions, and keep exploring the world with a curious mind.
Because knowledge is power, especially in these uncertain times.
It is.
So, until next time, we wish you all the best in your financial journey.
And may your investments be wise and your future bright.